Hello, everyone, and welcome back to the Insurance Toolkits podcast. It's been about a year since we recorded our last episode, and in that time, we've had a lot of changes to the platform and people who have joined our team who weren't on our team before. So we're going to all introduce ourselves first. My name is Joe. I'm one of the co-founders of Insurance Toolkits.
Yeah, my name is Colton. I am the head of business development for Insurance Toolkits.
And I'm the guy that has the logins. I don't know. I'm Chris, and came on about a year ago and really helped launch the final expense side. Really helped build out the term side, and really growing a lot and learning about the Medicare supplement side. So I guess I'm the field guy. I'm the guy that goes out there and makes sure that the thing works, the information's correct, and the stuff that you're putting in have played out in real time.
Absolutely. So what we decided to do when we're starting this podcast back up is we're going to talk about a different topic each week that pertains to all of you, not really one that pertains to the toolkit itself. So for this week, one we've chosen is picking a go-to carrier. What are the advantages to doing that? What are the advantages to being a broker? How can it help both you and your clients to have multiple different products available to you, whether it's 5 or whether it's 20? How can that help you in your business? Because that's what people like Chris, who write a lot of business and operate an agency, that's how they've been able to succeed, or at least it's one of the primary components in doing that. So I'll let Chris, who again, Chris writes about $400,000 a year personally still of final expense term business, as well as some Medicare in there. So he's going to go over the advantages of using different carriers and how that can help when you're in the field or selling over the phone.
Absolutely. So on my morning training for my agency this morning, I talked about kind of how I got my footing in the business, how I got that foundation built, and how I was able to make it through the hardest first 1 to 2 years in the business. And I said it's super simple. It's 3 core carriers, 20 leads a week, and a 5-day-a-week mentality. Of course, nowadays, I think you need a little bit more than 20 leads a week, but I think you need to be out there 5 days like it's your job. But talking carriers and core carriers and toolkit, 3 companies is enough in that first 12 to 24 months for you to be competitive, for you to do some serious damage when you get into a home going against a captive product, and for you, most importantly, not to overwhelm yourself. When I was brand new, those 3 core companies were the old Transamerica product, the old Foresters product, and God rest its soul, the old American Continental. You could fill out that application with a crayon, and they would still call and thank you for the business. And with those companies, I could be competitive in price. I could be competitive with niche products, and I could leave the home with a firm decision. Now, a firm decision back then was a phone call and not an e-app, but it's the same concept. So to be successful, to not overwhelm yourself, and to do this business in a streamlined manner, you need a core company and 2 kind of peanut butter and jellies to go with it.
Yeah, I think that's a good point. And when you do get more comfortable, you'll find there's a lot of carriers out there. When you look in these Facebook groups and people ask an underwriting question, inevitably for anything that's remotely difficult, you'll just get AIG, GI, etc. When in fact, if you look a little bit deeper, UHL, EIWL is a good example of one that you can get in 4 states, Pennsylvania being one of them. Dementia, true graded, CHF, true graded. Granted, it's a little bit pricier than some of the other GI options, but you can get that person. They might value having that 30%, 70% coverage years 1 and 2 over having to wait 2 years and just getting the premiums back for those really high risk cases, as well as a number of other things that agents just, Parkinson's, for example, and other things that for some carriers, at least you can get place level. COPD, for example, if you've been diagnosed for more than 2 years and haven't had any real episodes, Assurant will even take it level, just like anyone else who's perfectly healthy. So not knowing these little niches after you get comfortable with your core carriers can really, even if it's only 1 policy a month that you can place with them, that's, if you're averaging $500 in commissions a sale throughout the course of the entire year, you're looking at $6,000 if you're doing, 1 a month with that. So it can really add up, especially when you consider the average income of an agent is $45,000 a year for the ones that stay in the business. So it's nice to look at these people who do these huge numbers, but what is the average person doing? So for the average person, 1 policy can represent, maybe not 10% of their income, but at least 2-3%. It can really swing, the pendulum for someone who's not, writing hundreds upon hundreds of thousands of dollars a year in business, or someone who might have a lot of lead costs and need to offset that with other carriers and products.
Yeah, I don't want to step on Colton's shoes here, but there's a huge point that you just made there. It's that success is sometimes made in the margins. Anyone can go out there and spend $1,000 a week on leads, write the low-hanging fruit, and move on and do the next thing. But it's the people that can write a mod instead of a GI, who can place a niche preferred case instead of walk away from it. It's that little movable middle that helps you become more profitable. And especially on the days you struggle, you have a bad week, it's that extra profit, and it's the extra right thing to do for the client. Writing someone a policy that doesn't stay on the books doesn't do you, me, or the client any good. So those extra pieces of business do make a significant difference.
Yeah, and one thing I'll add, because I think social media is becoming a bigger part of what we do, as agents and what we're exposed to. And I think there's kind of this pervasive mentality that I see, especially online, is that easy is better. A lot of these captive carriers, where when I say captive, I mean that you can't sell anything else, because there are some models. I understand SNL has one where you can be a captive agent. Some of the Medicare carriers have captive models where it's really just a bonus program. But in terms of the carriers where like you can only sell this product, and if you get discovered as selling other products, you can get terminated or released. It's a huge downside to, yes, it might be easy to get it issued. You can put most of your business with that company, but even if there's 1%, 2 or 3% of your business that's either going, whatever the decision for that company might be, the lowest possible tier, where it's a 2-3 year wait, or you're getting paid very little commission, or in cases where they might have kind of an incentive for you to push business towards the middle tier, where it's the more expensive one, where yes, technically there might be a policy the company offers that's a great rate, but no one's really getting that. Kind of like the term where you could, when you apply fully underwritten with a lot of companies, yes, there's the super preferred, ultimate preferred term rates, but most people don't qualify for that. Most people, if you're applying Transamerica term is a great example. There's a lot of different rate classes for Transamerica term, but the highest ultimate preferred ranking is an absolutely a great rate. But I think, and they'll tell you this, most people don't qualify for that rate. Most people are going to be somewhere in like the standard plus or standard range. So it might be, yes, it might be easy to issue business with that company, but when you look at what percentage of business is going at what rate, and you use a tool like the Toolkit to see, where does that fall in the market, you can see that it's pretty easy to replace. If someone like Chris is coming in and they can get someone at 20% lower premium, because as we all know that carriers can't take everything, no matter what you have, no matter how great you think it is, from an actuarial standpoint, they can't. If they're more lenient on heart stuff, they're probably going to be stricter on pulmonary conditions. Or if they take something neurological like Parkinson's, they're going to be stricter on other areas. So every carrier just inherently, we all see these threads online of, if you could build your perfect carrier, and agents just list every single health condition the carrier takes as if that's remotely possible, when in reality, no matter what the carrier is, no matter what their intentions are, there's going to be a list of things that they have to be more strict on. So having those 2-3 carriers, you can have one carrier that will take nitro if it's been first filled a while back, or a carrier that takes cancer maintenance medication. So having those combinations can really help when you're sitting with a lot of different clients.
Absolutely.
Yeah, and then too, with having the core carriers, I think it goes beyond just finding what you think is best for the client and what you think is best for the agent, because you really need to be having that core carrier that's not only going to get your clients approved, hopefully issued day one, but kind of building off what Chris said. When you can get nitty gritty and not just shoot everything to guaranteed issue that's not going to stay on the books, you're going to put less money in your pocket, especially with certain companies who offer significantly less commission for guaranteed issue policies. You want your client to be getting coverage from day one, ideally. And then companies like Mutual of Omaha, they have a 24-hour commission cycle. You can get somebody on the phone, input their medications into the toolkit. It spits out the answer. You apply with them, get them coverage same day, go to sleep and wake up, and then your commission's on that next payroll. So it's not only going to be most optimal for the client, it's also going to be best for you, because the biggest problem is a lot of newer agents, they'll go write 10 policies in a week, and then 8 of them get kicked off to underwriting. And you just can't sustain a business when 8 of your policies are sitting in underwriting, you're not getting paid. If you get paid $1,000 from 10 policies, it's going to kill your margin. So like Chris also said, with increasing lead costs, it's just a recipe that you have to be relatively particular. And if you're writing through 8 different carriers, there's no way that you're going to be able to sustain that over the long haul, especially on the agency side as a broker.
No. And then the other part you start to deal with is when you're spreading out your business too far, you're going to have fall off. That's just part of the business. There's no way to prevent it. You can train on it. You can close good quality business, but you're going to lose 15% of what you write, no matter how good or how bad you are. And when you start to write a little bit here and a little bit there and a little bit there and a little bit there, all of these little 15%ers begin to build up. And before you know it, you've got $3,000 of debt on a company that really doesn't have a lot of practical application outside of some niche business. Right. So centralizing your business centralizes your cash flow, and your core company does need to pay you pretty quickly. When you're new to the business and your funds aren't where you want them to be just yet, Because let's be honest, we all failed our way into final expense. We don't have a lot of dough. So you have to cash flow yourself quickly. My favorite company right now starts people on as earned. So that's not a good fit for a brand new agent. But a veteran agent with some experience who can afford to play that game can afford to start that carrier later in the business. So cash flow is king. And a core company has to follow that three-legged stool model. What's right for the client, what's right for the agent, and what's right for the company. There's three legs to that stool, and it doesn't just lean on one or the other.
And I think that can go into our next point of, what should an agent actually look for? So speaking as someone who in 2019, which is my last full year in the field doing final expense, mine was Transamerica when I had that long paper application. I liked it because it was very predictable. So my number one thing that was important to me when selling is I want to make sure the cases I submit and write, because I wasn't doing $100,000 in business a month. It was more so 15 to 20 a month. So I wanted to make sure, I'm working part-time. I want to make sure that the business that I submit is actually going to get placed. It's going to get paid. And beyond that, is the client going to emit the premium? So it had Social Security billing. That was important to me. And it took Direct Express cards, because especially working in this, Chris and I are in the same area, Delaware County, Philadelphia area, you see a lot of Direct Express business. And it's nice to have a carrier like Transamerica who, you're taking the COPD standard, you can get the insulin placed. You have the fallback of the graded, it pays full comp on all the plans. So there's a lot of different components. At least at the time, off the top of my head, I'm not too sure if they do now, but they didn't cut comp on any plans. That was important to me too, because it was nice to get a good rate for the client. Yes, it is a competitive rate, but it's also nice to know when I submit business, I'm not going to get a comp cut if it for some reason has to go standard, or if it has to go graded, or if we have to, if I have to write someone who's older, I'm always going to get paid full comp. So that was important to me too. And I think it's something that gets maybe intentionally ignored online. Sometimes people like to say, I entered the business to help people. You would have became a social worker if you did that. You enter the business because you thought it was a good opportunity to make money like the rest of us. And it's a good thing to be able to help people. But if that was the case, everyone would be writing the lowest price carrier. And I just don't really think that's really the main motivating force for most people. So for me, I think a good example besides Transamerica as a go-to carrier would be American Amicable. Is a carrier that has those three rate classes. So if American Amicable is preferred, graded, ROP, so a little bit different than Trans, but you have a number of different rate classes. You can get a lot of conditions placed. You can put a note to underwriting, just like I liked for Transamerica. So if something did come up, like nitro pops up, the client hadn't taken it maybe in 3 years, but they're still carrying it, you can put a note and get that issued. I really like that, because I have a lot of cases where that would come up and the client forgets to mention something in the cabinet. So I don't know if Chris can speak to that further, but for me, those were the main components. Was that it was a competitive premium. It wasn't overly cheap. It wasn't overly expensive. I could get different forms of payment met. I had Social Security billing. And I guess a side bonus was there was some name recognition too. People knew what Transamerica was. They liked getting, back then it was the red folder. And that was something that I used to build credibility when I'm, at the time at least, looked like I was 12 years old, coming to someone's house. It's like, hey, this is this company you can trust that, yes, I'm representing. So
absolutely. I wrote down real quickly 1, 2, 3, 4, 5, 6, like 6 of the key things that I would want in a core company. Ideally, they cover ages 50 to 85, 50 to 80, somewhere that you're covering nearly all the age ranges you're going to encounter in final expense. You're able to place 80% of your business competitively with that carrier. There's no, like Joe said, wacky comp changes. Like 75, it goes down. 55, it goes down. 85, you're basically working for free. You don't want a bunch of wacky different comp changes. The rates, generally competitive. You don't have to be the cheapest, but you can't be the most expensive. There has to be some ability to take a little bit of niche business, true Social Security billing, paid within 72 hours, and an instant decision at least 80 to 90% of the time. If you're brand new to the business, you're using Toolkits to do your underwriting, you still want to be leaving the home knowing the business you wrote is going to place. Back in the days with old Transamerica and their 32-page application, you knew it, but I can't tell you how many times as a builder, I would open up AgentNet info and see thousands of dollars of commissions sitting in pending business. Because most agents aren't as smart as Joe. Most agents aren't as diligent, and the business would die in pending business. So make sure that the carrier you're using is easy to use so you're getting paid and remaining in the business.
Yeah, I think that's a huge topic. Like, I like the way that you said that. I think that's like a huge point that's almost not talked about enough is agents dying in pending business. You can have 85% of your income for the year just sitting pending that's never going to get paid out, all because of a very, very simple error that could have been so easily avoidable. And just having those nitpicky criteria is what can make or break your business. Kind of like you said, especially in those first 12 to 18 months when it's like you have to be all in and you got to be doing it right from the get-go because you don't really have that much time to recover.
Yeah.
And one thing that is important too, especially as some IMOs are going strictly virtual, at least when COVID began in early 2020, and we at the time, my several agents switched to a telesales model, probably there was a week stretch in which a third of the business we submitted to American Amicable had donepezil come up as one of the medications that pulled. So and this is something we see in the support chat too. Like, I submitted this case and it declined, and like, your toolkit told me the wrong answer. What happened? I'm like, did you ask the carrier what happened? No. Then they come back, they ask the carrier, and it's some random thing that came up that the client didn't disclose to them or they didn't fact find, which again can be difficult sometimes in a telesales environment. But that was something that was really helpful with us when using American Amicables. We saw the pull come up for donepezil, so we knew that, okay, this person, has dementia, or at the very least, every company is going to view this as dementia, and we were able to either pivot to something like UHL, express issue whole life, or worst case, we have to put it guaranteed issue. But it at least told us, and there's not too many companies that do that will tell you the medication or MIB hit that came up. But that's why when you look at the I think North Star is a place that only uses American Amicable, and I think that's a big reason, is it's so valuable to have that. As soon as I run the case, I know what comes up, I know what medications are coming up, so if I have to pivot or put a note, I'm not blind for the next 2 days while it goes to an underwriter. I don't have to get the client on the phone, call into the carrier, and pull teeth for 10 minutes to try to get them to tell me possibly which question number. So that was huge for us, and I think Americo is one that does that too. They'll tell you the medication if one comes up, but I wish more carriers did that. Liberty Bankers kind of does a form of it with the pre-check, but that's not available telesales. So I think that's a huge one too. If that's a carrier available, if a carrier available to you can do that for you, it's a huge benefit because it allows you to be able to pivot much easier and have that client at least trust you. Like, hey, this is why you forgot to tell me this important medication, instead of, well, I don't know what happened. It went graded. So that's something that's important too.
Last point I'll make on a core company, and then I'll drink less coffee today, is it has to have some kind of a reward, a carrier trip, a monthly incentive, a lead credit. They have to be putting some money in your pocket extra besides your commissions. These carriers have the budget. We appreciate it. I love going on carrier trips. Looking forward to the KSKJ trip. There's got to be some type of incentive for it to be my core company.
I agree with that.
And a big thing too, just to touch on what Joe said, it's almost impossible when your applicant gets declined and they don't give you any sort of reason why. I'm sure you guys have had the troubles of trying to get your client on the phone to get their MIB report. Is damn near impossible, to see how that, to see what exactly went wrong. And if your client genuinely doesn't know why they got declined, then you're stuck between a rock and a hard place, and you have no idea what direction to go in. So a big part of it does rely on the agent. The toolkit will take care of everything, but you do have to input everything. So if you're not being upfront with your client and saying, hey, listen, we need to know exactly what you're taking, exactly how long you've been taking it, and what you're taking it for, and spend the time going through it. Have them get out their medication box. Like, you need to know these things, and having that core carrier, they go hand in hand, and you can write so much more business when you get the process down. So I think it's a really, really good point to make sure your carrier does have that ability.
I think that the last point we can mention too is when you have a go-to carrier, that doesn't mean you should throw the kitchen sink at them. I think a good example is that email that Prosperity sent out about a week and a half ago, where they disclosed the cost. I think they said $92, $93. When you submit an application, it might be free for you, but it's not free for the insurance company. So a mistake I think a lot of new agents make is their mentality is, well, I'm just going to submit this. I'm going to see what happens. If I have to go somewhere else, I will. When in reality, if you're persistent, especially at the beginning when you don't have much business, I've seen a number of agents, and this was many years ago, so it's I would imagine even more prevalent today as more people move telesales. The insurance companies want business that gets placed. They don't just want you to submit apps because that costs them money. Even these carriers that might not do an MIB report at the point of sale, but that there's still some cost to them administratively to underwrite that business, even if it doesn't get placed, even if it's just an e-app. When you click that button, that costs the company money. So I think keeping in mind that your go-to carrier should be one that you value their keeping in mind that it costs them money, you should value their time and their relationship. They contracted you to sell their products, so being mindful that you should place quality business too, not just whatever that you can come across, and being intentional. If the company approves this, I'm going to go with this policy. It's not like, oh, let's see what happens. If it goes great, I don't think that's a great attitude to have, and I think it'll lead to, for a lot of people, an early exit to the business. Because if you lose one or two core carriers, for a lot of agents, that can really hurt you, especially in some markets where you don't have maybe the KSKJs, you don't have these more niche carriers available to you.
Absolutely. I think it's an old Scott Riddle comment. You should treat your core company like it's your company. And if you treated, and would you do that to your own company? And having that kind of philosophy might be a little bit conservative, but treat it like it was your own company. You wouldn't want to do that if it was your own.
And it's something that I think you'll notice, especially with the smaller companies, when you call in to help and you're someone who submits quality business. I think you can really see a difference in the people who help you. You learn them by name, and that can be something that's valuable too. So submitting quality business and making sure you're underwriting properly, so you do submit quality business, can be important as well, to make sure that business sticks, and using the Social Security billing component and not setting the draft date a day after they get their check because you think it might be in there. So a lot of these best practices that your upline should teach you you should really care about when you're submitting business, especially to your core carrier, because that's who's paying your commission, and that's why we're all in the business. It's a job at the end of the day. So
last thing for me, real fast. I think Chris will probably be able to touch on this the most. When especially on the brokerage side, having a core carrier, your agents underneath you are going to look to you and see what you're doing, and they're going to replicate that. So if getting that taken care of from the beginning, as your agency grows and you're bringing on agents underneath you and you're starting to expand and build the agency side of it, and you're not just focusing on your own business, you have a team of people behind you who are seeing what you're doing, the business that you're writing, who you're placing it with, your profit and loss reports, how much you're spending on your cost per lead, your cost per acquisition, how much is pending in underwriting, all of these things. So when you get it right the first time and you start to focus on those core carriers, everyone is going to help you and build that nice, healthy agency who's going to follow the same rules. So I think it's not just something that affects your own business, but it's going to genuinely affect the people who are following in your footsteps, because if you're not writing solid business and you're scattering all over the place, you can only assume that your agents will follow suit.
Absolutely.
It needs to be set in place like right from the beginning. And it's hard, but I think that getting that taken care of with having 2 to 3 core carriers, and that one carrier that you can go through, they have great customer service, they got great agent support, which is huge. You want to have, if you got a problem, you don't want to wait 6 days to get it resolved. Get them on the phone, get to the underwriting department, get to the compensation department, get it taken care of, and then keep, building your business. So I think, core carriers is very undervalued, but I think it should be valued a lot more as a primary focus, especially for, first year agents.
Well said. Well said.
I think the last thing I'll mention is this applies to all lines of business, not just final expense and term. I think on the Medicare side, especially where you have all these local sales managers, if you build a relationship with them and you submit good business to them that sticks, they notice that and they can help you get stuff placed. There's one local carrier that, for an agent I knew who wrote a good amount of business, he needed a new iPad. They just sent him one. There was no questions asked. He put a good amount of business with them. So building the relationships with the carriers that you put good business with that sticks, and you build relationships with the people in your area who get, whether you know it or not, they're incentivized on you producing. It can be helpful for you financially as well, because they want to support you and make sure that you succeed continually, because that's their success too. I think a fun stat is in 2019, 51% of Humana's Medicare Advantage business came from brokers. So I think a lot of times we think of these places as independent businesses that we contract with, when in reality, a lot of them, especially the final expense companies that don't have the name brand recognition, depend on agents, to succeed and to continue, because they're not getting people ringing their phones all day like we might think in some cases. So I think that's a good place to end our first episode. So each week we're going to try to record a new one on a new topic. If you guys have any ideas for topics that you want us to cover, feel free to comment them down below. And if you want to be a guest, if you think you have anything to add, we'd be happy to talk with you and possibly have any of you on. So unless Colton, Chris, you guys have any more thoughts, I think that's a good place to end for this week. And real quick, it does say dental vision hearing down there. It's not on the Toolkit website yet if you're looking at this video today, but we are releasing that the second week of this month. So next week we'll have dental vision hearing out on the back end of the week. So
that's super exciting.
Yeah.
I'll close with saying all the learning in the world doesn't do you any good if you don't go out and do the do. The best way to learn is to get out in the field, give your presentation, plug it into Toolkit, write the business, and learn in the field. The trenches are where you make your money. Sitting behind a YouTube channel and studying all day isn't going to make you any money.
All right. Thank you guys for watching. We'll see you next week.